Hello, thank you, Scott. Hello, Andy.
Hey Steve, hey Scott.
All right. All right. I think we hear each other. We're all good. So welcome to the trade of the week. And I must say, for those of you last year that attended, the weekly trade of the week, January has been kind of a disruptive month. We had a couple of guest webinars and a couple of holidays and an annual meeting. So we have not met for a couple of weeks, and so there's a lot to catch up on focusing on the actual trades of the week. So I'm glad you guys tuned in. Looks like a great audience. Before we move forward, of course, is the disclaimer, just letting you guys know what you're watching here is not investment advice, because we're not brokers, we're not licensed, we're not RIAs. We're just a couple guys who've been using this product for about 14 years. I'm user number 3 in the system, and Andy is number 40 in the system. We've been using it forever, and now we're on a salary to help really with the exponential growth that we got going. So before I remind this slide, we are not investment advisors or brokers. We are just showing you some cool content and some trading ideas and some cool software. So if you need some investment advice, you got to seek out one of your licensed professionals. And again, we did a recent study and a survey, and one of the big cloud words that came in was support. Everybody loves the support of trade ideas, and I would agree with them wholeheartedly. One, you've got the 4 webinars a week that Scott just mentioned, and most importantly, you've got the live trading room. This is a screenshot of the live trading room. We've got about 500 people in there every day watching Barry Anderson share his desktop using Trade Ideas technology, and people in real time chatting, asking questions, sharing information, helping each other. There's even a technical support tab in there. If you've got a problem, you can go to the live trading room and get a pretty quick resolution, and Barry might even give you a quick visual demonstration on how to fix the problem you've got. In addition to that, we've got something that's very unique. It's the one-on-one hour of power. Once you're at least a 1-month subscriber, you are available to sign up for a 1-month customized session with one of us, where we give you a call on the phone and we share our desktops, and we go over the whole program, answer any questions you have, and then start getting you built in the right direction that you're looking for. Everybody's looking for something different, so we kind of give you a head start. We share some scans with you. We build a scan together. But again, that's all part and parcel of the concierge onboarding process we have, which I feel really Trade Ideas is top-notch in terms of support. And at our annual meeting, a big survey that came back, that was showing up as, in fact, the case. People do like our support. Here's our subscription growth back in January. The consumer retail started to really take off, and I tell you, it's been fun, really, holding people's hands and showing them the power and the virtue of the software. But we are growing faster than I think anybody expected. For a few reasons. One, the base technology is awesome. 2, the AI technology was introduced back here. A lot of people like that. And 3, the word's just getting out. We're doing the support webinars. We're really helping people. So very proud of our subscription growth. And then Holly, the AI, this is just a quick look at last year's entire 2016 was the blue line, which was the SPY, and the green line towards the end of the year really kicked into gear as Holly started to do some separation in terms of aggregate point performance versus the SPY, which begs the question, how is she doing in 2017? Well, here's the proprietary chart of that going back to January. If we are at the end of the month, this is actually yesterday, so it's not including today, but not really much has changed with the AI today or the S&P, but that's how the year is starting off again for us. Put a little agenda together. As always, we kind of took a look at the market recap and where we are, where we could be going, what we need to look out for. We'll take a look at the rather quiet day on some AI trades today. And then, like I said, we've got a lot of catching up to do on the January trade of the weeks. So we're going to go through each one of these and see how they're doing and see how we picked them, and talk about some levels and some things to look out for. And then I've got a little performance chart real quick just to kind of show you. It's my own proprietary spreadsheet, but I'll drag that out and show you how some of these have been performing. I've got this alert that I still really like. I've been sharing it. Everybody I do a one-on-one session with wants it, and I'll show it to you guys again. It's called Bouncers. It's such a very simple little 30, 45-minute day trading bounce alert. We'll go through that and see how that did today. and then we'll set some alerts. The pickings are kind of slim out there right now, but we found a few interesting ones. And in yesterday's webinar, some newer traders were confused about how I kept using the word pivot point. What's a pivot point, and how do you identify a pivot point? Because a lot of these scans, still require us as traders to put our trader's hat on and identify the levels of pain that a short seller might go through, and if we can identify those levels and then mark them up with our price alerts, that's half the battle, is bringing trades that come to us. So that's going to be our agenda for this afternoon, and let's just get right into it. All right, so I'm going to enlarge this giant daily spider chart, SPY. This is what we've been looking at, for weeks on end and drawing these horizontal lines. But what was interesting to note was that, a couple weeks ago we broke down through that line and closed below, but found our way back into the range. Well, that can happen. But what was even more interesting was that we broke out to all-time highs here, along with the Dow going to 2,000. And we had 3 full days of trading that closed above that all-time high line. But then starting the week off, we had a weekend gap down, and today we even stayed below this line. So we got kind of 2 things going on here. One, we're raising a bit of a red flag because we have not been able to hold above this line and continue to build a base and move forward. We've fallen back into the old range here. That's kind of a red flag. But on the flip side, you see both of these tails here. We had the 3 o'clock and the 3:30 buyer basically show up again with strength. And that's something, if you look back here with all these wicks at the end of the day, buyers continue to show back up at the end of the day and try and prop this market higher. One of the things that we have not seen in a while is a close that breaks down technically and closes on lows without a afternoon buyer. We haven't seen that in a while. It just seems like the afternoon buyer just keeps stick saving the puck and popping it back into play. But that's what our SPY looks like. The diamonds up here after they hit 2,000, same thing. 3 days of trading above its breakout, but then we fell back into our range. And once again, 2 little mini hammer candles here showing you that there was price reversal intraday, and we had an end-of-day buying spree pop in and prop this market back up. So the shape of the candles are kind of a plus, but the problem is they fell back down into our range. So we're kind of back in no man's land here. I would have loved to have seen for the bulls to build price along this line and then move higher, but we didn't. We dropped back in. If you recall, early in the year, the IWM, after the election and then into January, the Russell 2000 was mainly our leadership index, just incredible gaps and movement and momentum. But since then, we've gone into pretty much of a sideways mode here. And this particular level I basically drew as resistance, and then resistance kind of became current support. We flirted with it a little bit here. We did close below it 2 days, but popped back into the range. Took it down yesterday, but popped back up and closed above the range. We went down again, popped back up and closed back in the range. So this IWM has got a real interesting sideways pattern going and just can't get any follow-through to the downside. And then speaking of leadership, the Qs pretty much are now our leadership index over the last couple of weeks, breaking out here of all-time highs. Many, many days of closing above our all-time highs, but giving some back just like the other indexes here, but still nonetheless we basically just kind of filled that gap right there. And once again, same thing. The candles are telling the story. On the intraday, we've got these buyers that just keep showing up. Look at the intraday here on the Q. Big volume, big sell-off, just like we had yesterday. Big volume, big sell-off, and then the buyers step back in at the close. Buyers step back in at the close. So 2 days in a row of kind of the same action. What we're going to want to watch out for is that one day where those buyers don't step back in at the close, and we wind up closing on lows on a big red candle. So that is that's the report for the market. Anything you want to add, Andy? What's going on out there?
Oh, Steve, I'm over here just answering questions, but
okay.
I'm sure you covered it. I'm sure you covered it really well. And
all right, good to know. All right, good to know. So we're kind of back in no man's land, but again, these afternoon buyers keep showing up. That's one of the things that I'm finding interesting, and there's going to be a time when that afternoon buyer doesn't show up. So we'll see how that fares when we get there. Next, we want to talk a little bit about what the AI did today. And again, just a reminder, the AI is nothing more than just another one of our alerts, but it has some statistical probabilities behind it. Every evening, we have our strategies, 30 or 35, go through the quantitative combine, and the ones with the best scores do wind up here on the starting lineup, as I call it, or the starting bench. And these are the scores at which they tested last night, win percentage and profit factor. What I found interesting here today was if we just kind of look at the end of the day, the power hour long had a 75% win percentage when it tested at 63 last night. The short side, we had some short sells this morning early on as the market was weak. Knocking on resistance is the name of that one, and that was 75% win percentage after scoring 62.5 last night. And then not lastly, but wake up call, another long one here, 3 trades, 66.7% win percentage after testing at 51. And then this one right here, nice chart, didn't really do much for us at all. This will probably go back in the hopper, and Holly will re-optimize that, and maybe it'll show up again another day. But the other story of the day was basically risk on and risk off. Let me talk about that. Risk off is shown down here as the desirable of the two today. And what risk off means basically is when you see Holly having an exit strategy. For instance, power hour long up here in the main parent window. Power hour long is a 30-minute hold. Shorting, knocking on resistance, it's a 60-minute hold. This strategy is a 45-minute hold. So essentially, if these stocks work and go the full distance, you'll see time stop, time stop, time stop, time stop. So these were all winners, and basically they had to get out. They had to get out because the time expired. And when the time expired, risk off is what we call that column right here. These are the P&L winners from the risk off column. Staying in a trade for the rest of the day was what we call risk on, and risk on didn't really work as well. So I think yesterday and today, with the market selling off hard and then buying it back and bouncing on the close, we had a lot of choppiness. We had longs, we had shorts. So the order of the day was basically to follow Holly in and follow Holly out of the trade. Now, when is the day going to be when risk on is the type of day to stay in? Well, I like to call it a rising tide lifts all boats type day, or a broad-based rally where maybe we open up, we don't gap up too much, but we never go negative. We just kind of trend higher, maybe a couple pullbacks, but a nice green day across the board where we have a lot of sectors and a lot of movement and a nice intraday trend, not this gap down, crazy sell-off and then buy back. There's going to be a point in the future where the market's going to have a nice solid trending day, and where it works all day long in your favor without too much noise and back and forth. Those are the kind of days where the risk on columns are going to work out. Those are the days where the risk on is going to work out a little better. So you can see risk off was the order of the day, whether you're going short or long throughout the day. Pretty much quick in, quick out was the order of the day for Holly, about 49 cents total on the aggregate. Let's see. Anything you want to add here on the AI? Andy?
No, yes, I totally agree with you, Steve. It's the last couple of days when you get this kind of action, just selling off and then bouncing back. And me and Steve and a lot of other people laugh about it being ramp capital, some crazy forces out there just buying back the market. But for whatever reason, it's the market, and it's the market we have. So, but it does make it tough sometimes, when you're trying to get a trending market to play some of these Holly calls. So yeah, I mean, when you're in a situation like this, yeah, you just kind of got to go with the flow, and Holly, is basically, saying there's no edge as far as a trend goes in this market right now.
Let's see if I can illustrate that for you more. These days right here are probably more, risk-off type days. But here we go. We opened up low, and we had a nice broad-based rally. That was most likely a risk-on type day. Same thing on the follow-up day. A really nice green candle opening low and then closing up near high. No real fret, no real back and forth through positive to negative, negative to positive. So if we can identify these days in real time, that's when you're going to want to pay more attention to probably staying into any of these trades that you may take rather than getting out too early with the risk-off category. So that's how we break that down for you. All right. Not a lot of trades today. I mean, I think we only had about 13, but it was kind of a wash. A few winners and then a couple of losers. One thing I do want to do is I want to take a moment for some of the newer people who are not really familiar with exit reasons. We basically have 5 exit reasons for the AI. The first was the most obvious here in the first 6. These positive trades all basically hit their timed stop. The reason Holly exited was that was the exit period. The shot clock expired and the trade was closed. The other option to that is a profit target. Now, occasionally we'll get a profit target on a really nice trade, and the trade will close out because the profit target was hit. Well, those are the 2 most easiest to understand exit reasons. We also have something called profit save. Let's take a look at a profit save example. So this blue line right here is where the trade was initiated. And what happened was we got into the nice move of maybe looks like 30 or 45 cents. And then profit save is basically like a trailing stop. You guys have all heard the term trailing stop. Well, that's what profit save does. Profit save does not allow Holly to get into a nice trade that gets in the green very quickly and does not allow it to go back and turn negative. But what happens is sometimes Holly can be a little bit over conservative on those, and those stocks can pull back and then move on. So for the rest of the day, sometimes it's wise to keep an eye on a stock that had a profit save, because if you keep it on your radar right here, it was kind of an obvious level midday that if we could break this 1275 level, there could be some more upside to a trade that was signaled. So essentially, the call goes and is live all day long. And sometimes it can be a double entry if need be. You just need to keep an eye on what it's doing. But profit save is going to be a reason for exiting, which is more likely, like I said, a trailing stop. Reduce risk. We'll talk about reduced risk. This is actually the last of the 3, other than stop hit. Well, we'll just go to stop hit. Stop, every single trade is going to have what we call a smart stop. In this particular case, the smart stop was 54 cents in this category. The algorithm looks at the volatility of each stock and the history and creates a smart range that would be considered the stop. And you can see negative 54 cents. The stop was hit. It actually went lower another 10 cents. So that's the 4th way in which we can get out of a Holly exit trade. And then reduced risk. Let's see if we can find a good reduced risk. That's a long trade, which basically started right here. So let me mark that up. So on this candle, here is our entry right here. Okay, so essentially Holly went positive, went negative, positive, negative, positive, negative, not really doing what the idea of the trade was intended to do. So reduced risk is just kind of early exit. Bail early. Don't stick around for a stop loss. The algorithm of the AI is identifying that the stock's not doing what it intended. So it's basically just kind of cutting our losses. Reduce the risk, cut our loss, don't stick around for a stop loss. All right. So a lot of people say that, the Holly trades, since they are exited, in the middle of the day for the most part, they say that, well, these are just scalp trades, but that's not always the case. If you're looking at the bigger picture, every single trade has its own daily chart to look at. And sometimes you might find a daily chart where Holly's getting out, and she's actually getting out on a nice breakout. So for instance, this one perhaps. We're moving out and taking highs. There is an element of keeping your trader discretion hat on in deciding if you want some of these trades to turn into a swing trade if they meet your criteria. But the AI will never carry a trade overnight. All of the AI trades are designed to be in and out during the day. But many ideas can be generated if you're looking at charts to continue to maybe keep half the size. A lot of people will keep half the size as they move higher. And then try to get a little bit more out of a swing trade. So that's all I've got on Holly today. What I want to do is go into the trade of the week, and we've got a few to talk about here because we've missed a few weeks and we've got a few to get back on. I want to go back to the first one of the year, which was SBGL, and SBGL essentially. And what we're looking for a lot of times, guys, are stocks that are getting ready to break a downtrend and have some nice movement, a couple weeks, hopefully maybe even a couple of months of movement back to the upside. And so using the trend change lubricant, which is this guy right here, a lot of times we find some interesting trades on this scan that's looking for stocks that are beat up down like this but breaking their downtrend. So I'll just zoom in and show you what was going on. Basically, this red candle was the last day of the year, but this green and red candle typically had already kind of broken out of a downtrend. And we just went ahead and decided that some exposure to this particular stock that was on the trend change lubricant would be warranted to start the year off with a possible change in the trend in the GDX, in the GD and the gold miners. So essentially, this green candle right here was the first day of the year, and that is where we got long the recommended trade of the week for SBGL. Now everything's working fine. You get a couple of days of movement, and then you get some pullback. You know, markets and stocks got to breathe. It's 3 steps forward, 1 step back, or 2 steps back in some cases. But as long as we are building higher lows, which is what we're doing, and this one right here is definitely a higher low. You can see SBGL got a bit ahead of itself up here and ran right smack into, I can draw that up. You can see right here this prior support, which will be a great segue into pivot levels. Prior support back here on the daily chart basically became current resistance. So the price slammed right into that level where back here it was support, and then it has nothing to do but give a little bit back, and that's normal. And nobody likes to see that, but this is the anatomy of a stock breathing. Digging in, 2 or 3 days of pullback, dig in, and I would venture to guess, Andy, you would agree this is a higher low that we just put in right there. Okay.
Oh, for sure.
So we're continuing to build what we call a trend with higher lows and higher highs. Ideally, we want to see this SBGL break out of the level that got slammed on last week. So that's really the next order of business for SBGL is to get above 920. Now, once it gets above this level, we're talking about 25% or so in performance, and I'll be happy to show you guys the spreadsheet on that one later after I finish all these. But something that you might want to consider if you're still long this is getting above this level, maybe selling a little bit. You know, we could have a really nice move if we can get above this. This way, maybe when you go into sell mode and sell 1/3 of it and start taking profits. That's how a lot of good swing traders and position traders work. They sell when they can, not when they have to. In other words, not falling for the, oh my God, the stock is breathing, I got to get out because I was up here and now I'm only up this much here. You really got to work with the patience of keeping your fingers off the button and staying with the bigger picture. And the bigger picture is hopefully for this to break out here, and then ideally I would say it might not be a bad idea to sell a few shares going forward. So SBGL is doing really well. The GDX has been performing extremely well. Let's go to the following week, which again was looking for a high short float. In this particular case, we had a nice tight range, and on this one we had 31% short the float. Well, what happened is on this particular red day right here, this was the Monday that the alert came out, and the alert basically said to buy at about 13.15. But what we say is if the stock gaps up, you got to really use your own discretion, and sure enough, stock gapped up on this day. But if I recall, we were in the live trading room. Dan Merkin set a great example because this stock was coming back very quickly on the 15-minute chart, and Dan used the original entry of 13.15. He just waited for the price to come back to it rather than it breaking out. So he used a good discretion on that one. And essentially, this is still a very tight range, putting in higher lows, and again, I'll highlight this metric right here. The short float is 31%. It's a pretty good short float contingency. So if that price starts to get back above, and essentially we're right back here at 315. So this particular trade of the week is flat. It's 0%, not up, not down. It's just right back where we started. However, that 31% short the float still could provide some energy to move higher and take this thing hopefully higher. So that was really the methodology in True. Before we had this big gap up, we had a nice level of resistance that was obvious with 31% short the float. And the short sellers tried to bring it in, but they still have not been able to take it to lows. The buyers are stepping back up. And if I was a short seller, I'd start to be getting a little bit nervous again with the high short float. So that's what's going on with True. It's basically a zero flat trade at the moment, but that could change in the near future. FCX was the following week. This one's easy to explain why we liked. For those of you who have heard me talk about the washout bounce candle, or another word for it is the hammer candle, this showed up on my washout bounce alert on a Friday, and we discussed it that we really liked this particular candle. We liked the way we had a nice gap up. So here's the thinking, guys. Here's old school. A big gap, a green bar, oh my God, it's getting away, I got to buy it. And you're happy for about a half a day. But the mean reversion and the 3 steps forward, 2 steps back nature of this market really did call for exactly what happened. A nice stock breather, and then look, we had a gap to fill. So what a lot of people probably did was recognize this gap, logged into their E-Trade account the night before and said, well, I'm going to put my stop loss order down here in this area and hope I don't get hit. Well, what happens is on these washout bounces, and if I could get back to the actual 15-minute chart, you'd see it all happens in the first half an hour. It's basically an HFT handprint algorithm, HFT washing out all the stops down to a certain level and then buying them back quickly. How do I know it's HFT? Because this buyback didn't take all day. It took about 10 minutes. Basically crushed everybody in 10 minutes and then bought it all back in 10 minutes. This is typically why I call it the washout bounce. It takes the old school buyers, finds a way to shake them out and shake the shares from the weak hands and then eventually move higher. So when I see this candle, especially filling a gap and going below the gap, this was a really no-brainer. As soon as we saw this, we all agreed this should be the trade of the week. Now, we had a little bit of give back, but our stop is basically down here below this wick. So we had some room to breathe, and then before you know it, the base started to build, and we moved higher. And at one point, we went really, really nicely. This was a really nice move, and I would not fault anybody for maybe even taking a third off on a day like today, on a day like this at the end of the day when you see how the candle is going to close. But once again, markets 3 steps forward, 3 steps back, a little bit of pullback, building a base, and now we're moving back higher again. So higher low on that washout wick, building a base, pulling back, higher low on building this base. I still think FCX has a lot of room to run. I like this trade a lot. Let's go back and take a look at our pivot levels again since we're talking about pivot levels. Here's a great example, I think. So let me draw this line and maybe we can kind of see why FCX stalled out right here. Okay, support, congestion, broke down through the congestion. All this time it took to get back. We are now back at these levels here from a few days ago, but you can see why the sellers jumped in here. They're looking left on the chart, and they're seeing congestion, support. So for the time being, FCX has some stuff to work out here at this level. And sometimes you got to zoom out to really see what the significance of that level is. But I still like the way FCX closed today. I still think this one can be moving higher.
That potentially, Steve, has the makings of an explosive move. Look at the two biggest volume bars in the last 2 months were on consecutive days right there. Try to sell it off again. You had another washout bounce. You could almost call it that. Almost filled the gap and popped right back. Yeah, exactly.
So everybody
now you're getting back above that range. So this thing may want to go to 20 pretty quick.
I really like this trade. Now I'm not going to draw a corollary to GDX, but FCX is basically a mining manufacturing of copper, and so still kind of a solid sector, a close cousin to GDX, but forgetting all that, love the footprints in the sand, love the washout bounce.
It's kind of an old school infrastructure play too, being copper. So it could along with some gold mining, but it has a lot of potential.
All right, okay. GoPro was 2 weeks ago. And here again, let's talk about pivot levels. Down here, support, break support, okay? Try to come back. Oh, crazy wick, right up to where? The supply level, and rejected. Crazy wick, right up to the supply level, and rejected. This one got close, but close enough for government work, and same here. This, to me, is an obvious pivot level. So the trade of the week actually came out right here before the gap up, and again, as we say, use your discretion on stocks that gap up, but in this case, the stock gapped up, not too much, didn't really sell off very far, and slowly started ticking higher. So we're using the bottom or the opening print here of 987 roughly for our GoPro. But what's most notable is that it spent the whole week not giving back its gap. Sideways, 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 sideways. And once again, 33% short. We're doing the same thing we've tried to do a lot of times, unless we find something unique, but a trend change lubricant trying to break the ice on the way up. And what you really can't see is that that is a very, very solid level down here for GoPro. It's basically tried about 3 times to break that level and hasn't done it. So what we got is a nice little cushion here. Now, since we had a gap up, I've basically, and if you guys are in this stock, I've basically raised the stop price to right here at 9. So we've moved the stop price up because of the gap, and we have definitely got our move yesterday. Tried to give some of it back today, but boy, the buyers stepped back in, closed on highs. 33% short. I would not want to be short the stock the way it's looking today. So I feel that GoPro will continue to have, some upside potential. Let's look back. Okay, I see something right here. Well, that very well could be our first level of congestion and resistance, because where once was support, we could find some supply. I'd love to come back in a week or two and say, hey guys, look, GoPro made it to 1250, but probably would be wise to maybe sell a third along the way here and there just to lighten up if needed. So looking good there in GoPro. And the last one was this week's trade of the week, INFN. And if again I go back, it's not so much a short float play. It's about 9 or 10% short. This one has just had a really nice long base. In addition to that, it had kind of a little dip down and back up here. So you could almost call this kind of an inverted head and shoulders. And it's behaved itself very well in between this range right here. So what we've got is, you guys can see the range that I'm developing. Let me just keep it right about there. And now we are creeping back close to the top of this range. Now, the actual trigger price for INFN this week is the top of the, and let me downshift into the 5-minute because it'll make a lot more sense why we made it at 903. Look at the seller here this day on a 15-minute chart. Somebody was just selling the crap out of 9.00. A couple of attempts above, but then right back. I mean, just a flat top right there at 9. So we have a huge seller at 9. A little bit of a wick that went through up to 902, so 903 is essentially our trigger point on this INFN. We got within 1 penny today, right at the close of a trigger. So I'm predicting, guys, tomorrow we may see a bit of a gap up on this one. And again, use your discretion. If it is a gap up, if it's an extremely high gap up, you may want to wait and see if it comes in a little bit, maybe down to these levels right here, and find some support. Or ideally, if it just opens up and starts trading through 903 like butter, that is the trigger point for the INFN trade. And let's see, what else was I going to add about this? There was something else. Well, obviously we would need to clear out this area as well, but it's kind of a head start trade because we've got kind of a downward sloping trend that we basically broke out of, but we're just using the high end of that wick right there. So put INFN, and I'm going to put INFN on my watch list tonight as we share a couple of trades to share with you guys. I fully feel like INFN could trigger very early tomorrow. Anything else you want to add on that one? Here's how it closed today, guys, making a really nice move, and look at these volume candles here. So we'll see. That's the magic level. But going forward, a nice base to break out of. Where could we be going to? Well, we could be going to that level for one thing, and then after that level, we could probably be looking at these levels. Ideally, I hope to be talking about that someday.
Yeah, I think it looks very similar to INVN, the way that one was setting up a while back, and we know what happened. That was also a trade of the week, and you can see there on the longer term frame, kind of putting in a long base. Yeah.
Mm-hmm. Look at this Look at this very identifiable level here. And this one had a short float that was much higher back then, and then it eventually got acquired. But this was a day where the shorts said, I'm out of here. I am not sticking around to be above this orange line. Look how many times the price got stopped at that orange line. So again, you guys, chart reading is an art. It takes hundreds of hours to start to figure the forest through the trees, but the best advice I can give you is start with the daily chart and look left and see where the support and resistance levels are, and then that starts to give us an idea of where the current trading might start to find interest. So with that said, let me grab something. And again, this is proprietary. Please don't ask for it. I'm not going to give it out. I'm not going to share it. But this is just my own way of tracking what we've done so far for these particular trades. I've got our entry prices and the current price. So as of today, these are of the closing prices today. SPGL is up 22.9%. As I laughed and mentioned, TRU is right where we started. True is at 0. FCX is up 8.6 as of today, and GoPro is up 8.6 as of today. INFN, if you'll notice, you'll see has not triggered, but I anticipate this is going to get filled out tomorrow, and we're going to start to activate the INFN trade. What I've done over here is just to kind of show people the max profit. I mean, at one point, as I said, SBGL was up as high as 923 or 25%. True did go positive for a day or two, up 1.6. FCX 11% at its zenith recently, and GoPro was up 10.3 just yesterday. So this is what I call the alpha generation right here. You know, not everybody's going to want to stick in or stay on for the same amount of time. And if this market rolled over tomorrow and wasn't able to hold these levels, well, at least I can point back here to this particular level that says, well, at least we generated some alpha in January, and hope you guys were taking some profits, you know, along the way. I'm also showing what would happen if you had entered $1,000 for each trade. Well, after the 4 open trades we have right now, that $4,000 would be worth $4,400. So off to a decent start for January 2017. That's kind of the methodology that we use to pick and manage some of these trades. I did see a question about SPWR. I don't know how Andy answered it, but I'm looking at it here. You know, it's just not behaving. I mean, what do you think about SPWR? Andy?
Well, the way I answered it, he mentioned that it had a little action today, and I said, yeah, that's a great close. Had a great close. But then I said, it's got a long ways to go to be a constructive chart, but a good start.
It's downtrending.
Potentially double bottom there. It held the low. Yeah, I mean,
lower high, lower high, lower high, lower high, lower high, lower high. So until that changes, I would almost be watching. Maybe if I drew a trend line from there down across here, this one might not be so much a horizontal pivot line, but it might be more of a trend line break. You could keep an eye on that. But it's been tough going for the solars here as of late.
Would you mind if I answer the question for everybody? Because the guy brings up a good point. And he asked, what is the average hold time of trades, trade of the week? A week, a month, and that's a good thing you bring in. Because as a trader determines, the whole time. I mean, there's so many factors. What's the market doing? What's the sector, its peers doing? Is it intact? Is it trending? And that's why we always encourage, when you get a nice, like Steve showed you a lot that were up at one time, 10, 15%. When you get a move like that, you have to take some off. You don't have to, but it's wise to take, a third, even a half off, and let the rest of it run for you, work for you. Even if you sell it all the way down to only a 10 or 20% hold, you can hold a little bit in case you do get a CWEI move that was a trade of the week last year. And I'm seriously going to bring that up at one point. Yeah. Again, look at this. Even if you held 100 shares in this thing, you would.
Here was the trade of the week right here, guys. This thing had 56% short the float, and I think it was up 500% basically. Well, actually, the trade of the week was actually down here. It was even longer. This was just an example I made because, again, I want to show you guys pivot points. Zoom out, look left. What do we got? Support, support. We broke down through, tried to come back up. Then it became resistance, and then it became resistance again. And then it became resistance again. And how many times do we need to keep building higher lows and higher base camps before we find the break in the ice and break through the glass ceiling? So again, I'm coming off of yesterday's webinar. There was a few new people that kept saying, well, I don't understand pivot points. Can you please describe what you mean pivot points? How do you know where to draw lines? So these are kind of the examples I'm trying to set. Okay. Let's do one more just for, it wasn't a trade of the week, but it was a wonderful trend change lubricant call that came out of the abyss, U.S. Steel. For some reason, U.S. Steel always doesn't want to zoom out. There we go. Let's see if I can click it in just one. Perfect. Okay, U.S. Steel is in a horrible downtrend. As it based right here and started making new 20-day highs, we noticed that it had 56% short the float. Well, guys, let's take a look here. Bounced off support, created congestion at that level, broke down, came back, and it became resistance, kissed resistance. So there's a 1, 2, 3. It's about as easy of an example as you can make of what a pivot point should be. So once the pivot point has been established and the short sellers are aware of it, look what happened at this day right here. They all realized the same thing. I do not want to be short this thing if it's going to break back above the pivot. We had 3 or 4 days, 5 days of solid short covering, a small pullback, and then another month of short covering. So I hope I've made my point really on how to identify pivots using the zoom out feature, using the daily charts, trying to find levels that were once support, become current resistance, so on and so on. All right. What does float percent mean? The higher the float, the higher potential uptrend? Yes, Aaron. Basically, the smaller the float, and in my opinion, a 20 million shares and below is a small float circulation. 20 million to 100 million is probably small, medium. Anything above 100 or 200, 300 million, those are your medium, large floats. So on this trend change lubricant, I have not only sorting by my short float. You can see here I can sort. And so 37% is the percentage of 104 million. So I don't really have anything under 50, it looks like, but occasionally you'll find something on here. For instance, like CWEI that had 56% short the float on 10 million shares. So those are the ones you really want to pay attention to and mark up. And when I say mark up, well, if you guys don't have the ability to do what we call the price alerts, where you can right-click and create a price alert at these levels, that's part of the premium function. And for those of you trying the open house next week, we'll be turning that on for you as well. So price alerts all day long, you can set levels using a right-click in the mouse to alert us to a level of interest that we might want to see. How do I analyze the daily chart of dry ships? Yeah, the daily chart of dry ships. Let me just give you guys a caveat. One of the problems with newer traders is they see something like this, which is an anomaly you probably won't see in another 10, 20 years, and then the game started with the dilution of the float. Let's zoom in. How do I see a chart like this? Well, what I was saying yesterday in the webinar, these are the kind of widow makers that you can do as a new trader, where you've convinced yourself that at any moment, Dry Ships is going to announce what I expect them to announce, but what's the price telling you? I mean, this was a death march of 4 weeks from what? $40 down to $2. I don't like charts like this, guys. Today, does one day make a whole turnaround? I don't know. We'll see. But this thing's been in an absolute death march. I don't like to really recommend these types of trades because it's such a horrible, massive momentum to the downside. Now, I did it, and I know Andy probably did it and learned quicker than I did back in the 90s. I had a couple charts where I said, no, here's the story on this thing. Here's what it's going to do. Everybody's going to finally figure it out, and this thing is going to go. Each day, the chart went lower and lower, and I looked at it, and it took away my mental opportunity focus. It took away opportunity cost for other things. So I don't really like to look at charts like this. Takeaway number one is that's a horrible downtrend, and one day of a reversal is not really something to get excited about. And more importantly, the big reason that most people are trying to play this thing is because of this stupid thing right here that happened. Everybody's thinking in the back of their mind, oh, this is going to happen again, and I'm going to catch it when it does. Trust me, guys, this is not going to happen again. So that's kind of my cynical view on dry ships since you asked. Okay, open house starts next Monday, Fred, on the 6th. I wanted to go through again one more time, and I wanted to share. I'm going to just share it right now. I'm going to right-click. I'm going to save and share. I'm going to copy this strategy, and it's going to go into the chat window. I basically look for the toolbar of GoToMeeting, hit the plus button, and inside the chat window, I'm going to put this thing called bouncers. Maybe some of you have seen it, some of you haven't, but I think this is such an easy to understand, simple strategy for a 30-minute or 45-minute hold going long on a day trade. Okay, so let's take a look at a couple of these and see what they're actually, trying to tell us. Let's start with one of the first ones this morning, TIF. Okay, let's look at the big picture. There's yesterday's low at that orange level. You see today's green candle traded below yesterday's daily, but as soon as the price fought back through yesterday's low, that was our trigger. And our trigger in this case is called breaking above resistance. and here's the 15-minute look. Okay, here was yesterday's low, the orange line. We opened up, traded down below, but as soon as there was no follow through to the short side, the stock just kind of just gravitated back up like a ball underwater. And what I really think, let's look at another example real quick. The next one, AVY, same thing. We took out yesterday's lows on the open and a nice bounce for 45 to an hour. Here's what I think is happening in this scenario, guys. Basically, the short sellers are looking for a break below yesterday's low and some follow through. And when they don't get their follow through, they're very short lived to turn around and cover and buy the stock back. So what I think is happening on bouncers, these are basically failed breakdowns of yesterday's prices and then a nice move back up. Let's look at another one. VFC, I think, was a great one. There's a lot of them on here today, but took a little while. This one was later in the day, but eventually it fought itself back through yesterday's lows and just kept on going. The short sellers had nothing to work with. A couple of random ones. That one really didn't do much at all. Let's see, APA. That one didn't do much until the end. Let's see, what else did we have on here? I don't want to show them all, but that's basically, the gist of it. What did CBG do? Okay, here's a decent one. Took out yesterday's lows and then midday fought back, and what do you know? It never looked back. It went from 29.96 to 30.36. So a really simple strategy to comprehend and understand, and it's a very short-term hold. So for those of you that want it, go into the chat window, and all you got to do is copy that link, and that link is basically your cloud link. So I'll do it for me. Let me just see something here. I'll show you an example. I'm basically copying the cloud link to my clipboard, and then we go to Trade Ideas, Load from Cloud, and there it is, bouncers, load, same thing. So that's what was passed out in the chat window. Very easy for you guys to collaborate and bring this actual scan and alert into your own repertoire. And just keep an eye on a few things. Here's ITB. This was one of the last ones of the day. It took all day. It broke yesterday's low, but look, it fought back above. And again, what I think is happening is it's just short covering, not working. Somebody's saying they're not getting the bouncers info, so I'm going to do something else. I'm going to answer his question directly, so I'll paste it in the question box this time, and I'm going to send that to all, so everybody should be able to see that. So there's two places in which you guys can get the alerts. There we go. All right, so you should have that in the questions box. Wanted to share that with you. So before I go, I want to set maybe a couple of alerts. INFN was one that was set as our trade of the week. I've got Juno set. I'm going to delete these and start over on those because I want them to be fresh. We'll just leave GoPro in there. So INFN, as we said, is the trade of the week, and we're basically going to set it at 9:03. So I'm going to go up to 9:03. I'll go to my daily chart. There it is. Right click, create price alert. Trade of the week is all I'm going to give myself for notes, and there's that one. What else did I want to do? I wanted to look at, I think, Juno. Juno would have been nicer if it had given us a little bit more time today, because you can see this would have been a nice trigger, and basically it did trigger today and had some follow through. There's two ways you guys can play this. You could possibly look for a pullback to this level here at 2077, or ideally, if it's going to have 21% short the float on 90 million shares, I think we've got to just wait until it breaks this next level right here, this high. So I'll just go ahead and create that price alert right there. Give myself the alert, 21%. Trend change lubricant is where he found that. So we're setting that one, looking for a short squeeze. What else did I have? I had TRIP. I like this one. Kind of going back and forth, creating a nice little trading range here. And if you'll notice, the high of this wick basically corresponds with the high of this wick, where my crosshairs are. And what is that high? That high is 53.58. We're going to go 53.59 and basically just set a price alert to go long. This one only has 11% short the float, so not as much. I prefer things at least above 15%, but I like the way it's just kind of going sideways here, and that little dotted line now you can see is our bracket. There's the support to the downside. If this thing can push above that, then we've got some void here to fill, and that's what we always like to see if we look left, a nice void area, a gap to fill. And let's see, I've got one for the short side. The shorts have not been working, but I at least want to show you again. This is the exact opposite of the trend change lubricant. Watch this real quick. Duplicate, configure, and then we flip, and we have the exact inverse of this particular strategy. So this one's looking for stocks and downtrends, basing and moving up and breaking new 20-day highs. This one is the opposite. It's stocks moving up but rolling over and breaking their 20-day high. And in this case, I found this particular one right here. And it's the exact opposite of we're flipping upside down like a GoPro. We're just looking for that level in the ice that's of interest. So the low of that wick is 1110. The low of today's wick is 1112. So let's just go 1109, create price alert. It knows we want to go short, and we'll just say 1109, and we'll throw a short one in here and see if there's any follow through. You know what very well might happen? The way this market is, guys, it might take out yesterday's lows and then pop back up and show up on the bouncers. So I don't have a whole lot of confidence in this, but I wanted to at least throw one short in there and show how we can use the price alerts to try and find levels of support that might eventually get broken down through. Okay. The trend change lubricant, yes, of course, I can drop that in there. I'll drop that into your question box so everybody can see it. If you're looking for my trend change lubricant, there it is. You can have a copy of that. Now, there was two that Andy pointed out. You had a couple on some interesting pullback alerts, didn't you, Andy? You gave me one. You gave me Mosaic, which I really liked. Are you on mute, or are you still with me?
There you go. Hard time hitting it button. Yeah, Mosaic I really like a lot there. Yeah, nice pullback. This is on my pullback, still trading above 50 moving average. It's a kind of a range finder where you're looking for stocks that are pulled back on the 5-day chart, but still has a bullish pattern. Mosaic, and I was trying to think, Steve, what the other one was. I think we may have actually kicked it.
I wrote it down. It was GBX.
Oh, yes, yes, okay. yes.
Let's finish with that.
That's a good one, yes.
Basically, here is your 3 steps forward, 2 steps back, bucking Bronco volatility market. People see this breakout, oh, yeah, I'm going to buy right here. It's a great green bar. And then all of a sudden, immediately, the horse starts trying to buck you off. So we're going to play off other people's pain of 4 days of pullback and then a nice day digging in here, closing off at highs. This can be a typical building of a new higher low on a trend. So essentially, we just look at today's high. Let me turn my crosshairs back on. And we're going to put the alert a penny above today's high, which is 31.39. So we'll go 31.40. For a price alert, and we'll give it a little different name. We're going to call this, what should we call this? Daily pullback.
Yeah. Now the theory behind this one is you buy the high, that's what you call a setup bar, and you buy the high of that bar and use the low of the current bar, which is beautiful because it marries up to the one next to it, and you just use that low as your stop. There you go.
Okay, so there's our trigger point, today's high, and there's our out if it doesn't work. Yep. And finally, last but not least, it was, what did we say it was? GBX.
GBX. That's a nice...
Couple things going on here. One is it did show up on Andy's 5-day pullback, but look at what we got, guys. We've got our hammer that we've talked about earlier where we've washed everybody else out. Really nice volume bar today. And, moving back higher. In this case, I'm not going to call it an algorithm HFT because it basically sold off with the market, but it slowly brought itself back and then closed at the high of the day. And to me and everybody else that bought up here, that's quite the washout. So what I would do, again, same as before, a high above today would be 43.76. So we'll mark it up at 43.76. Perfect. And we'll call this a washout. Bounce, because that's kind of what it is, even though it's also a 5-day pullback. And let me give you what I think. Okay, so what this means is this thing's trading higher after hours.
Okay.
We got to delete this. Let's see where this thing is after hours. because when those trigger like that, we go to show. We got to go to this one. Properties, show post market. There's just one little tick there above at 43.30. It's really gonna throw us off for this. Shoot. Well, go ahead and write that name down tomorrow. GBX. I don't know if we're going to be able to actually set the alert where we want it, but it could come back to the 43.75. But this is something that ideally is a washout. The weak hands have been thrown out, and the buyers are back. So ideally, this could be a decent 1 or 2 day even swing trade if we can get some sort of a bounce out of it. All right. So with that said, let me quickly share what I do with these price alerts that we do have working. We've got 5 working price alerts. And just so you know, if you guys are coming in next week on the open house, this is going to be a contest that we have where we ask you guys who you feel like to send in working price alerts. Not triggered. Triggered would disqualify you. But working price alerts by Wednesday evening, February 8th, we're going to have a little contest. And whoever gets the most alpha in percentage movement on Thursday and Friday by the close will add up the best trades that triggered, and that person's going to win a pretty cool prize. But for now, I'm going to share these 5 selected alerts with you. I'll go ahead and drop them into the last known question here. Send to all, and I will also put it in the chat window for those that could access the chat window. So what that is just basically a cloud link giving you all of the triggers that we just set here together going forward. And
yeah,
that is all.
For some reason, yeah, for some reason I can't see your stuff that you're dropping in the chat either.
It's weird because, you know what? Oh, it looks like it went to somebody.
You're chatting to somebody private or something.
It's chatting to somebody private. Let me see if I can turn that. How do I turn that off? Well, that's kind of odd. Oh, I see. Okay, hang on 1 second. Entire audience. Let me paste that again. All right, that chat window should work for the entire audience. That is my price alerts. I'll even put the trend change lubricant back in there in the chat window. And you'll have a couple minutes as Scott's going to speak here. I'll put the bouncers back in there as well.
I put it in there. I already put it in there.
You did put the bouncers in there already? Okay.
I did.
Cool. All right, so let's bring in Scott. He's got a couple things to show you and share with you on going forward. And Scott, take it away. Hello, Scott.
There's my mic button. I found it.
There it is.
Yeah. So a couple new things. Steve already gave a good idea of what the open house is, and that's coming up soon. I'll talk about that in a moment. We also launched kind of with a soft launch last year at the end of the year, the Trade Ideas podcast. It's out there. We're at about 5 episodes. This Friday will be 6 plus 2 special episodes. You can go back in the archives and get the special ones. The first special episode is an interview between Dan and Phil, 2 of the founders, and the second one between Dan Merkin and Brad Williams. Both those interviews, they're talking with each other about the beginnings of the company, how we make our decisions about the technology, and some really interesting insight into the company itself. And the regular episodes, so far, it's been Dan Merkin and Jamie Hodge, having a conversation about what's been going on that week, talking about the philosophy of trading, and some interesting items. Each podcast is between 8 to 20 minutes. I hope you guys download that in your favorite podcatcher app on your phones, tablets, or computer. Just search for Trade Ideas Podcast. You can find us right up there. It'll be up on Friday afternoon. If you're on our email list, you should get a notification, or just check, or just subscribe to the app, and you should find it in your phone. Tomorrow afternoon, probably by about 6 p.m. Eastern. And then also coming up, we've talked about that, is the open house. The open house is going to be February 6th through the 10th, and I think you can probably move on to the next slide there to give them a visual on that. And the 5-day open house preview does cost $8, but that covers your exchange fees. Everyone that signs up, we have to pay the exchanges about that to give them real-time data for the month. So we're having you for 5 days, full access. Regular subscribers can get access to premium with the same open house pass, and join us for those 5 days. Tell your friends. The trading room is going to be very busy. We're going to have some special webinars that week, paying special attention to the open house trial members. We hope everyone that does not yet have Trade Ideas Premium gives it a try. So trade-ideas.com/open house. Just go ahead and sign up. When you purchase your pass, you get some emails letting you know where you should go to download Trade Ideas Pro, all that kind of good stuff. And then you get a reminder on Monday morning, coming up on Monday the 6th, to log in and join us for those 5 days. We hope a lot of people take advantage of that. We're looking forward to it. The last couple of open houses we did were fantastic. Everyone that joined had a great time in the trading room and learned a lot. So also, you can download these slides, including the slide with the special, if you go to the handouts panel on your GoToWebinar interface and click on the little plus. There's a PDF in there for you. You can just click on download and get it. And there's also a code that's good right now, Year of Holly, all caps, just like you see it. So when you go to trade-ideas.com/price and decide to become a subscriber, whether you're picking up standard or premium, the same code applies, and it takes 15% off your first month or year of premium, or 10% off your first month or year of standard. And standard also includes a full hour of one-on-one training, so whichever tier you purchase, the first thing you should do is go directly to our support page and click on training, and then go ahead and use that little app that's on the page there. It has a calendar. You can choose your preferred trainer if you want, pick the best time and day that's open for you, and just go ahead and lock that training session down and get that head start. Of course, the premium version of Trade Ideas is where you find Holly, the AI, and that's what you'll be able to test in the open house. So this coming February, starting tomorrow, next month, is the best time to try us out, because you'll be able to try premium access for just $8. Try it out for a full week, and then we hope you become a lifetime subscriber, really. I'm looking forward to it. It's going to be a fun week next week. We have some other webinars this week. There's also the QA webinar you get invited to. That one's tomorrow. There should be an email in your inbox within the next hour or so, and also a webinar on Thursday, the Trading Studio with Andy, and that's going
Scott?
Yep.
Yeah, can I say something about that one? Because I've noticed the last few webinars that there's a lot of new people in there that hasn't seen our software, and sometimes we get advanced in going through some of our more advanced windows. But guys, be sure you come to my one on Thursday afternoon in the same time slot. I'm going to be going over some of the basics and how you can take this software and create some really good alerts, not knowing very much. So I'm going to dedicate that time to helping those that are kicking tires and looking at the product for the first time. Sorry, Scott.
Yeah, no worries. Thanks, Andy. Yeah, the place to go to register for the open house is trade-ideas.com/open house. Someone just asked. If you want to, and we'd really like it if you did, you could follow us on Twitter and Facebook. Andy and Steve, our Today Trader, that's mostly Steve Gomez. Dan Merkin, our CEO, is Trade Ideas 1. There's also QuantBot, which is Jamie Hodge. There's regular Trade Ideas account is at Trade Ideas without the 1. Trade Ideas Pro is our name on Facebook.com, so Facebook.com/Trade Ideas Pro takes you right there. Go ahead and like that page so you get the updates from there, and you can share the goodness we share with your other Facebook friends. If you have any questions, you should email info@trade-ideas.com. That is the email address that goes directly into Help Scout or Help Desk software, and it gets routed to the appropriate team member, whether it's a billing question or a trading question or a software question, what have you. It's the best place to send your questions. The phone number is great if you have a billing or subscription question, but we're not going to be able to help you much with the software over the phone. So hit us up on info@trade-ideas.com or email Steve or Andy directly, steve@ or Andy@. You can also go ahead and use that chat that's on most of our web pages during normal business hours. We have someone live on there that can help steer you in the right direction as well. So thanks, everyone. The webinar will be up, the recording tonight at some point, and you get an email reminder about where to find it, and the open house and the podcast and all that kind of good stuff. So we'll hopefully see you tomorrow in the Q&A. That one's going to be hosted by Dan and Brad. So thanks, Andy. Thanks, Steve.
All right. You're welcome.
All right, thanks, Scott. Thanks, everybody.
Yeah, everyone have a good evening.